What's your origin story? What brought you to this point?
To this point. So I grew up in an entrepreneurial family, and I guess I just was always fascinated by business, and I thought the place to start, well, finance is always a good place. People always said to me, an accountant will always have a job or have work, or everyone needs an accountant. So I thought, okay, that's a good place to start.
What are you seeing? What would you share with sort of founders around this space?
Yeah, I think what's really interesting, we always say to our team as well, that finance is the most privileged team or position or role in a business, because you have access to everything. Now, and I think good finance is all about plugging into that and using it to maximum effect.
Well, fundamentally, it enables make better decisions, doesn't it? And getting cash wrong, you get your profit wrong, you've got more time to turn it around than you think. You get cash wrong and you could be out of business in a month's time. It is it's that critical.
It is that critical. Yeah, I completely agree. I think, that is exactly it.
Hi, I'm James Johnson, founder and CEO coach, and this is the Peer Effect podcast, where your peers will tell you how to 10x your business. Numbers are something that founders are sometimes scared of, but actually they are the key to sort of scaling your business at pace, but smoothly and safely at the same time. My guest today, Marc Obrart, is the co-founder of FinHouse. They provide flexible and scalable finance teams and CFOs to over 50 scalable businesses at the moment across 12 different industries. If anyone can help share insight on what you should be doing, I think it's him. This is the episode for you if you want to know how to maximize your finance team, unlock the extra gear, but do it safely. So Marc, welcome to the podcast.
Thank you for having me, James.
So we're going to talk today about scaling sort of safely and smoothly by knowing your numbers. But before we jump into that, little birdie tells me that you're actually a qualified FA football coach.
I was. So I embarked on that in 2018. So I was coming out of one of my last full-time roles.
Yeah.
About to embark on sort of fractional work, and my son was kind of moving up some of the ranks in terms of youth development football, and I thought I always loved football, and I thought, well, here's a great opportunity. Someone asked me to be involved in coaching in their kind of just below academy level, development team. And I thought, if I'm going to do it, I have to get a qualification. So
properly.
I did it, and I just was astonished at how different it was to when I was growing up and involved in football, where you go from playing with your mates in the playground to 11 aside, and this was all structured, and how the FA had formed it, and it was brilliant. And then what was also amazing doing it was just how much crossover there is in the business world.
Really?
And how, because it's interacting with people, not how you develop people, and certainly at youth development, you've got to get your messages across in a clear, concise way that kids can understand. Like the terms we all shout out as football fans, they haven't got, line, like man on or whatever. They're like, what are you talking about? So it's really interesting how you have to process and how can I relay my messages so they understand simply, and they can learn and evolve what's going on in the game as they're going through what they're playing, because there's lots for them as they go up year by year. There's more for them to contest with and just understand. It was just fascinating, and it just then makes you realise, certainly when it comes to finance, how can you translate that to non-finance people?
Yeah.
And it's very it's so interchangeable. Like, how can I deliver a message and a story and a narrative, or how can I get someone to understand who's not necessarily have the same understanding that I have? So it was fascinating, and I love obviously being around people and that whole piece around developing and coaching. Coaching is different to just managing and being a line manager. So it really opened my eyes up to that, and I think it actually set me on quite a nice path of enhancing my leadership skills and what I was about, and obviously just my understanding of the game and things like that was also was great. So that's my one of my fun facts.
And how then did so it sounds like you were going through a transition.
Yeah.
You've now set up FinHouse. It's been going for sort of 4 or 5
4
years.
years, yeah.
And what's your origin story? What brought you to this point?
To this point. So I grew up in an entrepreneurial family.
Yeah.
My dad, my uncle were always kind of doing their own thing. So traditionally qualified. So one was a lawyer, one is a civil engineer, but went off to do their own thing. So that was always around me. And I guess I just was always fascinated by business, and I thought the place to start, well, finance is always a good place. People always said to me, an accountant will always have a job or have work, or everyone needs an accountant. So I thought, okay, that's a good place to start. Went into it thinking it will open up doors, it will give me a really good grounding, and then I can sort of figure out what I want to do. So realised quite quickly I didn't want to just go and become a partner and just do run of the mill. I don't like middle of the road. I wanted to do something that was a bit different. So one thing led to another. Within a few months, I was working with 5 businesses, and I was like, "Oh, this kind of BD talking to people is quite interesting." So, and what became very apparent, and it's probably really obvious to you and lots of people, out there, will be like people buy into people, and you can be yourself. And it was really interesting for me that where I kind of lost a bit of my swagger and just energy around what I did, I started to get it back really quickly because I could be me. I didn't have to be this person someone wanted me to be, or this arsehole who just it's all about the numbers and targets, and you go and get rid of this team or this person, like it's always someone else's fault. And I met some unbelievable founders as well, and what became apparent during that period, and I did it for probably just over like a year and a half, there or thereabouts, before I got headhunted to go somewhere else, was the support that these businesses have access to. So they've got their accountancy firms, and they've got good relationships, and if there's obviously going to be a partner who's like a main contact and has the relationship, and they're always there, they want to help, but they're so removed from the business, and because they deal with so many clients and things, so they can't be embedded and know what's going on. And it also lacks that real commercial understanding. So they can give you advice based on what other clients do, or, oh, I've seen this, or yeah, one of my team will put a cash flow together for you. And then you see that cash flow and it just falls off a cliff after a year. And it's like, okay, so what are you going to do about that? It's all very well seeing numbers on a page, but how do you drive impact with that? So it felt like there was a gap in terms of how can these businesses have access to, obviously, like fractional. It's probably more portfolio, it was called at the time. It was starting to become a bit more of a buzz thing. But how can they have access to finance talent at the right time and people in the right seats and help them? So, obviously the whole kind of concept of FinHouse was very much just a pipe dream. It was nothing more. I was just trying to work out how can I bring more people on, so it's not just me going and delivering, because there's only so much I can do. And then amongst all of that, trying to think, right, how do I build a little niche consultancy?
So I think you're quite a unique situation to be seeing the patterns that sort of occur across businesses at a similar stage at this kind of scale up phase.
Yeah.
With a finance lens and so that commercial lens as well.
Yeah, absolutely.
What are you seeing? What would you share with sort of founders around this space?
Yeah, I think what's really interesting, we always say to our team as well, that finance is the most privileged team or position or role in a business, because you have access to everything. Now, and I think good finance is all about plugging into that and using it to like maximum effect. Because you can be, I think the typical, when you think of outsourced finance, or you think of a finance function internally full-time anyway, if they're full-time perm people in the business, there's, when everyone would say more office-based traditionally, they're sat in the basement or in a dark corner somewhere, and they want to just get on, churn through what they want to do, and they don't interact. But actually, my philosophy always has been you flip that, and actually you get in the business. It doesn't matter whatever you're doing. If you're processing expenses, you're raising invoices, you need to be completely intertwined with the BD team, the sales, account management, sales team, new sales, existing, everything like that. You've got to understand everything that's going on, and you can just work completely collaboratively. And I think that's what finance is all about. So, in terms of what we see, we often come in, so it's either a company's outgrown what they currently have, so the more traditional model, they're using their accountancy firm, or they're in their shit, excuse my kind of bluntness to it. And so you go in and see things have been overcomplicated, or maybe the CEO or the founder or whatever the makeup of the leadership team is, they've been leaning too much on finance, and it gets to a point where they'll know their business inside out, but the finance expertise isn't aligned to what they need, or they're being pulled in 1,000 directions, and they need to focus on what they do best. So I think what you always end up seeing is, you don't necessarily have brilliant basics. So the foundations of finance, like in a well-run machine is what is needed. So it doesn't need to be a complicated system. People think, oh, I've got to go onto an ERP or something like that, or I need to plug in NetSuite. Like, no, you probably don't. Yeah. Unless you're like maybe a very complex inventory-based business, you might do. But otherwise, you can probably get by with 9 times out of 10 probably people use now because of its flexibility. So what you need, so you need the day-to-day to be running well. So of course, there's some governance and compliance that comes into that naturally, and making sure there's controls and things like that. But you just need things to run well. And then the key is how you can get insights out. So now we're in a data-driven world, even more so than ever. Everyone wants everything as of, last week. I want my accounts a week ago. I'm working day 2. I need all my information. But if you've got a well-run day-to-day, you can have access to that information on a regular basis. So when things are running smoothly, you can easily, my go-to or my absolute non-negotiable for any business to have is a rolling 13 weekly cash flow. Now, obviously, if you're in a position where you're in quite a good position with cash, you've got a bit set aside or on deposit or something like that, maybe you can have a rolling monthly instead. It also depends on the nature of the business. But I'd say for most businesses that are going through growing challenges, rolling 13 weekly. And why is it rolling 13 weekly? Because in that that's a 3-month period. There should be nothing that you don't know what is happening. Like some of your customers or clients will be on maybe anything from 30 up to 90-day payment terms, or you'll have suppliers or you've got suppliers who are holding you to 30 days. So you need to be able to balance that out, or do you need an invoice financing facility or something, working capital to support you? But everything in that period you should know about. Which new hires are going to be coming in that period. You know what your monthly payroll is going to be, all your other fixed cost base, etc. So that is gold dust, I think, when it comes to being able to stay on top of your cash flow, know what's going on, and give confidence to the business. So, if something then it's agile enough, you're changing things on a week by week basis if you need to be, and you've got enough visibility to make sure you're building some cash cover or getting through what could be a challenging period.
Because it's interesting, I think clients that I work with from a coach or advisory perspective, it is often that cash shock that changes the game. I think most people are quite good at their numbers, have an instinctive kind of,
absolutely,
are we profitable, not profitable? Although sometimes if you're not on top of your numbers, you're actually wrong in that because there's missing revenue or there's costs you haven't factored.
100%.
But it's that cash shock that is really scary. It comes out of nowhere.
Yeah.
And then you often have little time to do something about it because it's something pretty fundamental.
Absolutely. And it can unravel all the trust that a finance team has built up. But the classic, the one we always see in this, sorry, we went off on a slight tangent, but going back to your original question, the thing that probably catches people out the most, or founders or business out the most, VAT. Yeah. Classic one. And it's in many ways it's a red herring because you're charging that, like most businesses are going to be fully VATable in what they do. So you're charging the VAT and you collect it. So you're taking the cash in. And then, you'll get to the end of a quarter, and we've seen this so many times before. And, you go to a founder and say, you've got 150k liability. What do you mean I've got 150k liability? But that money is money you've been sitting on. And it's, you can't put, there's no blame on the founder. It's like within your finance capability, you need to kind of be saying, look, we need to ring fence a bit of this, or just say, look, our cash is, you're seeing an improved cash cover position or a cash position we're in. But bear in mind, this is 20% of this, or however much of that, 100, going back to that example, 150k of that is actually not available cash. So we always make sure, or I always say it's great practice, that you just, split out what is purely available cash that you can use and obviously play with more, and then make sure you're keeping sufficient cover on it. And I mean, that's one of those things that it's a constant cycle. So you can use the money because you're going to be collecting it when you start the next quarter, but it trips people up so many times, and that's where getting the messaging so important, like how you manage that and let the business know what they can use and have access to and what they can't.
Because I've often seen with scaling founders when they're coming out of that startup phase, they're kind of managing by gut feel based on their bank account.
Yes, yeah.
And it's like,
that's
actually not very helpful because you might make the wrong decisions and spend money that you don't have.
Absolutely.
But you also make the wrong decisions and not spend money that actually you do or will have.
Yeah.
So you're making this kind of assumption. You're making the wrong decision.
Yeah,
basically.
absolutely.
You're using the data wrong. Like it feels like the right thing to do to watch your bank balance.
Yeah.
But actually, a cash flow forecast is much more useful.
Absolutely.
And having really good management accounts, you actually understand sort of the story of the business.
Correct, exactly that. I think that's spot on. And that's such a good example. People, we all do it. We'll look at our bank accounts all the time, but you're very much in the now. And you and I know what it's like as founders as well, and from our own experience and working with people, you've got so much going on. Oh yeah, I've got 250 grand in the bank now. It's fine. But actually, your VAT, just going back to that example, that's about to go out in 3 days, which they know about, but they just haven't linked the two together. And exactly, it's how you've got to bring forward looking in as much as possible. And and that's where that 13-week tool is brilliant, because you've got enough visibility to be able to manage the agile decisions, and then you can extend that out on a monthly basis where you can be a bit more blue sky thinking, higher level, to be okay, if we're going to hit on that, right, we can see how we're doing this year in terms of profitability, all that, and that ultimately generates excess cash in itself, aside from timing and things. But exactly, it's just you've got to take those tools and make it continue to make something forward looking, and then you're giving the insight. So then that gives the confidence, because the business can be like, so much of it is linked to, like, can I hire these people? Can I go and spend this money on marketing, sales campaigns, etc.? And then you can just be able to balance that out, knowing you've got live data you're making data driven decisions around. And I think that's where finance adds its most value. And yeah, of course, as you said, management accounts, knowing key margins and what performance looks like, and the relationship from you were saying it as well, James, just a moment ago, that you can look at bank or look at cash, and that's obviously based on things that there's timing outside of that, always, that you've signed a big contract which could be a big retainer a month for a services business, but that money's not coming in for 60 days.
Yeah.
So it's going to, the profit impact's going to hit your P&L. You're going to see that coming in, because you're going to recognize, obviously you raise your invoice, you're going to recognize it, of course you are. There's obviously going to be costs associated to it, because you're probably going to have people delivering, you're going to have a team that are going to work on that. So you can sense check your gross margins all fine around it, like your cost to deliver that, how effective you are at doing that. You know what your general cost base is. But actually, then hang on a sec, well, why is my cash flow not increasing? I'm making, it's 100 grand retainer, I've got a 50% margin, I should have 50 grand of excess cash on that, because my cost base is absorbed by all my other revenue or something, for example, my OPEX base, operating cost base. And that's the interesting thing, it's joining those dots up and being able to link that together, I think.
It feels like there are sort of two stories going on that founders need to understand. Going back to your founder, it's kind of like there's your profit story, which your management accounts tell you, kind of like, this is the fundamentals of the business. And then you've got your cash story, which is probably long-term related, but it can actually be very different in a period set.
Yeah, exactly, yeah.
And I think often, I've experienced with you, but like founders maybe don't understand their management accounts story quite well enough, because put together by an external factor, and they haven't really understood it. They go, this is just what the numbers say, but they don't really understand the story that's telling them.
Yeah, exactly.
And they may not even be looking at the cash story.
Yes, correct. Yeah.
At all.
Yeah.
And once you understand both of those, then you can scale with a bit more confidence, because these shocks go. And even doing the work of putting together your cash flow story will highlight where some of the risks might be.
Absolutely, yeah, exactly. And it's how you break that down into like digestible, really easy ways to understand, because like lots of people don't look at their balance sheet either. So you could be a business where you're doing lots of like research development work, or you're quite capital expenditure extensive in terms of what you need to buy, equipment and so on and things like that. So that's not feeding its way into the P&L. Like founders are interested in EBITDA, they're not interested in retained earnings are important for dividends and things like that, but generally EBITDA is the metric everyone wants to look at. So anything you're expensing on capital related items, that's below that line, so you're not really even seeing that, but it's eating away at your cash flow. So then it's taking what you're doing as a performing business. So that's really what the P&L is showing, like how effective are you at managing your business and focusing in on key margins. I think it's so important you don't need to have 25 KPIs, but you just need to know, if you're a business that you're doing recurring revenue, if you're a SaaS business, for example, MRR, monthly recurring revenue, key stat. You want to know that that's as stable as it can be and ideally growing. and you want to know about churn. Are you losing anything? And then obviously there's a gross margin involved in that, which will be important. In a SaaS business, you'd expect it to be quite high. And then what's essentially your operating costs, just maintaining the status quo, and your people costs will come into that and things like that. And then you get down to like EBITDA. So that's how efficiently or how operationally effective are you at providing your service in that case. But then you've got to link that to cash flow. So that's where like numbers are numbers on a page, but they don't mean anything unless there's a story to them. So that will be your performance story, but then you've got to link that to cash flow. And then, I know I've always had conversations with founders where, we've gone into businesses and really established businesses that very nearly ended up falling off a cliff because the relationship to what was going on in P&L, and probably not accurately, to actually the cash flow position. And I remember like inheriting something where, they were presented with a cash flow that basically took them almost out of business in a few months, and they're like, why wasn't this flagged sooner, type of thing, all panic stations. And then you end up like rewriting, like we rewrote the playbook for finance with that, going back to basics and just saying, right, how do we restore confidence and do that? And then the link is always between here's how you're performing and here's the cash flow situation. And so hang on, but we're doing X amount of EBIT now per month, the margin's going up. Why am I not quite seeing that in cash flow? Oh, because your biggest client pays you on 60 days, not 30 days. So there's a bit of a knock-on effect on that. But as long as you can correlate the two and you know what's going on, and our job as finance people is to maintain that control and trust and always know what's going on, and have 2 or 3 options that you can manage if something doesn't go to plan. And that's where bringing budgets are not just what you want to achieve. You've got to use it as your driver. Like, they need to be realistic. They need to apply accountability to people. That you need to, like, it needs to be your Bible, essentially. Like cash flow and that, you've got to stick to it. And of course, things will change. I've never put a budget together where a week after signing off, something else hasn't happened. You're like, great, back to the drawing board again. But it's just how as long as you're within the realms. What people want to know is, can we increase our revenue by X amount? Like, is that a realistic target? Can we get to that? Can we look to improve profitability? Lots of scale-up businesses are not always profitable. And when you're not profitable, that is going to eat away at your cash, because the gap's got to be filled somewhere. So it's really, but that, I think, it's putting those key bits. So a useful set of management accounts. They don't need to be complicated. They just need to give the right insights and make sure it tells the story. Cash flow, rolling 13 weekly, going into an extended rolling monthly, just to kind of see a bit more of the future, and you can build that piece together, and that aligns to then your budget plans, which will naturally become a rolling forecast in terms of for performance and keeping on track. And I think if you go by that, well, I say much shouldn't go wrong. It obviously will, but it's then how do you navigate that? And then in finance's role is how do you maintain order and keep things on track and keep confidence around all of that?
Well, fundamentally, it enables make better decisions, doesn't it?
Yeah,
because
exactly.
if you've got the right set of data and you can see all the angles, you can make an appropriate decision. Whereas
absolutely.
If you're making it with just like one lens and going, oh, I'm profitable, but you're not seeing the big cash hit coming, there's just like a massive blind spot that could take. And getting cash wrong, like you get your profit wrong, you've got more time to turn it around than you think. You get cash wrong, and you could be out of business in a month's time. That's like exactly it is. Yeah, it's that critical.
It is that critical. Yeah, I completely agree. I think that is exactly it, and I think that's just that is the fundamental of what you need to do, and I couldn't agree more with that.
Well, one of my dark secrets, actually, I'm a management accountant myself.
Oh, okay.
Like not really practicing, but when I was with Jardines, that was one of the things we had to do, like so we could be effective as a generalist. Yeah. We had to do a SEMA qualification.
Oh, nice. Okay.
Not that I go around telling people that. But it's very helpful. Yeah. Because the reason they thought it was so important at the beginning, it just gives you a great lens going to any business, because businesses look very different from the surface. Absolutely. And they are quite different. Yeah, they are. But when you have the numbers, with clear numbers, you can understand any business. Yeah. And with clear numbers, you can control any business. Yeah, completely. And if you're looking to scale something, the worst thing that you can do is try and scale it too fast or out of control, because it'll die. Completely, yeah. And I think the other great thing now is the software and tech that
enables you to be able to track, if you're running a marketing campaign, or even from day-to-day finance, like the access to data that you can have so instantly now and use, and the way you can set up the structure of your finance system and how it can talk to your CRM system. Like, there's no excuse not to know what's going on, and actually you have access to this amazing level of insight, so you can make data-driven decisions. It doesn't just have to be off a hunch or I think it can just increase the confidence of what it means, and I think that's great. And then it means you can move at pace with that if you want. But you're absolutely right. It's getting it all balanced out and just knowing, and yeah, cash is always the key behind all of that, no doubt about it.
And I'm not sure you feel it, but it feels to me like if you don't understand the story or feel like it's not your role to understand the founder, someone is not telling you that story simply enough.
Yeah.
Because you say it's not many. There's probably not that many key stats you need to look at for your business. If you don't understand your management pack, or there's like a page in there that you think, oh, it's there, I just skipped past it.
Yeah.
Why is it in your management pack?
Yeah.
Like,
absolutely.
if your cash flow, you're like, oh, I don't understand it.
Yeah.
Then it's not a good enough cash flow.
Yeah.
And that's not because you don't get the numbers. It's not because you shouldn't understand it. It's because it's not simple enough, which is hard. It's hard to make it simple.
Correct.
But it should be simple.
Exactly.
Right?
I mean, the amount of times I know I've inherited a reporting pack, and the amount of rows and numbers, and it's like, well, of course no one's going to pay any attention to that. But it's and you just, I remember taking on something that had, it was a very kind of simple business in terms of like what we do, but more around talent and internal talent acquisition and support, and having a revenue recognition sheet, which wasn't really needed because actually most of the cycle's monthly anyway, across like 80 tabs in an Excel workbook, and I'm like, right, this is going down to 2 tabs. It's like a master billing sheet and a reconciliation sheet to show that what's being billed matches our finance system, and it's just people overcomplicating when you've got that much. Like, of course, it's always an evolution. Reports should always change and evolve, but stay within the fundamentals of what you want to show and the messaging around it. But when you're just adding complexity to something that is a monthly recurring invoice, basically. Yeah. And yes, there's some changes to that, and there might be some, resourcing changes and things like that. But keep it like, things are simple. Like, finance should be simple. There are challenges in terms of, you're waiting for a big client or customer to pay you, and they, you're on 60-day terms already, and they're pushing it out, or there's something that they're challenging or contesting around. So it's got back and forth, and right, that money is significant whether you get it in or not. Of course, you can. The proactive way of doing things when smaller businesses are dealing with enterprise level clients, that's normally where those issues come. Have an invoice financing facility. So yes, it's going to cost you to have that facility, but at least you're able to get nowadays probably 90% of the funds at least in. So at least from a cash flow perspective you can keep things going. But it's really interesting that you can just lose sight of things so quickly and overcomplicate things. They're the challenges that exist in like the commercial side of things and customer success side of things, which is not responsibility of finance, but you need to know that those challenges exist. You need to know what risks are going on in the business all the time. Have a regular risk review of like which key accounts might be at risk. Are they going to renew year on year, or are they going to expansion is brilliant, but if they're going to be at risk, well then we need to take action now to work out, right, does something need to happen around that? And I think too many times, and we see it as well, that finance is reactive. If finance is reactive, it's the most dangerous thing it can be. Whether it's outsourced, in-house, whatever it is the most dangerous thing that could ever happen.
So if, like, for founders listening, what is one sort of actionable sort of takeaway they should be thinking about doing, if not immediately after this podcast, at least shortly afterwards?
Get if your finance team hasn't done it, or even if you're a very early stage business and as a founder you're doing more of it yourself, get a 13 weekly rolling cash flow set up, and it can be super simple. It doesn't need loads of detail to it. We'll make sure you've also got the basics in place. So have a finance system, like let's say Xero for most people. make sure your bookkeeping's up to date. It sounds so simple. Now, whether you outsource that, you're doing it yourself, you've got a friend doing it, or your partner's doing it, or whatever, your accountancy firm's doing it, doesn't matter who's doing it, just make sure it's up to date. Things can be done accurately. Now there's the software that sits alongside that, can do 90% of the work. Obviously there's still like value add that needs to be done alongside it, but equally just nail the basics around the day-to-day. So be comfortable that the day-to-day is able to run and you've got some control around that, and that will ultimately feed into your rolling cash flow. And then at the end of the month, make sure you've got some level of insight. Even if you're extracting a report from zero, the reporting in the system is terrible. It's not, but it can give you enough for what you need to see in terms of the basics. And from that, you can easily set a few KPIs that are going to be key to say, well, actually, does that look right? Is, what's going on there or something like that? So you can ask questions about it. So use the KPIs as a way to drive the business. Make sure what your numbers are showing you from a month-end performance perspective and year-to-date, always key as well, is aligned to what your cash flow position is. And if something doesn't look right, ask questions or reach out for help. Help is always there. And the great thing now is you can access that help, in a really easy way. You don't need to commit to anything. You might just bring someone in just, as a one-off, just to set you up for the next year, and then actually you bring that person in when the time's right. But never be afraid to ask for help. I think that's the key. Certainly when it's not your area of expertise, and we don't need to wear 25 different hats. We do, but we don't have to. So that's what I would say.
I think that's really useful. I think what I'm taking from this is to say that there are these different stories going with your business. You need to understand all of them.
yeah.
And just not like, it's kind of like driving a car. Like without this data, it's kind of like driving a car at high speed, like with foggy windscreens. You just can't you need to be what's looking sort of with good data. You can see out sort of down the motorway, sort of miles ahead, rather than sort of being in like heavy fog.
Yeah, exactly.
Well, thank you so much, Mark, for sharing your insight.
It's been brilliant. Yeah, thank you for having me. Really enjoyed talking it through, and hopefully it's of some use that someone out there will say, yeah, actually I can take that away and maybe put that into action.
Well, I guarantee people listening who will go, oh yeah, I can definitely do that.
Yeah.
And there'll be people listening who in like 3 months' time go, oh God, I wish I had listened to that.
And no, always happy to chat to anyone if they just want some, advice. That's always like absolutely,
Perfect.
Our approach, my approach as well is always, everything's about relationship. That's where finance is at its best, when it's human first and you build relationships. So if anyone wants to going through a bit of tough times, or they just want to kind of discuss a few things, or be able to vent, get it off their chest and be right actually, and be able to, and I can give them some actionable points of what they want to do. Always happy, like they can reach out to me anytime. I'm happy to.
Best way to reach out to you?
LinkedIn, or like my email's mark@finhouse.co.uk, anything like that. But probably like LinkedIn's easy. They can just drop me a message or something like that. But yeah, I'll always come back, and like I said, always happy to talk to fellow founders and things anytime. So yeah.
Amazing.
Cool.
Thank you.
Thank you very much.
Such a great episode with Mark today. I really love this idea of sort of these stories you need to understand about your business, and how these different finance reports can help you do it. Your management accounts, your cash flow, and just really understanding your key metrics. We'll see you next Wednesday for another founder episode, or Monday for Postbag with Freddie. As always, if any questions, just drop us a line at hello@peer-effect.com. Happy listening, and keep on scaling.